If you can't measure it, you can't improve it, says Peter Drucker. The same applies to businesses. If you can't measure your growth, if you can't measure your performance, then you actually don't know where you are going and you cannot prove where you are going. Hi, my name is Molen Mkuzi. I'm the Managing Director of Brainmore Chartered Accountants. Today in this video, I will explain the key metrics that each business should measure to stay on top of their businesses. To start off, let's define what are metrics. Metrics are defined as a set of numbers that give information about a particular process or an activity. In a business context, a metric is a quantifiable measure used to track, to monitor, to assess the performance of various business processes. Metrics are also known as key performance indicators or KPIs for the business. These KPIs allows you to track growth and the performance of the business so that potential problems can be identified and key decisions should be made to particularly solve the problems identified. It's very important for management to make well-informed decisions backed up by facts and numbers. Numbers don't lie. To small business owners, I want to say, putting or drawing up KPIs is not a waste of time or resources. It's a must if you want to build a sustainable business. Someone might ask, what are the key KPIs that I should look at? Well, stay tuned, hit the like button, subscribe to this channel, and hit the notification button as we are going to talk about the 9 KPIs that you should measure. Business is business, meaning to say to build an entity, there are key components that needs to be put together. Therefore, a range of matrices in the business should be able to be measured to track different things like your sales, your financial performance, your customers, even your human resources. Looking at this now, you will need to not to only focus on things only like sales. To have a holistic picture, the business performance, you need to measure the growth in many ways, tracking the relevant metrics together for a bigger picture understanding of performance across various functions of the company. Okay, enough said. I'm going to talk about the 9 KPIs that you should constantly track in your business. Number 1 is your sales revenue and growth. Sales revenue or income is the key metric every business needs to measure. It measures the financial performance. It is measured by just looking at the income from sales. This can be month-on-month sales growth or annual to give you an indication of your business financial performance in a yearly or in a monthly basis. This will obviously allows you to assess and evaluate the company's sales growth and how the products or your services are performing in the marketplace and how successful are your marketing efforts or your campaigns in comparison to previous year or previous month. To improve this KPI, you need to increase income through maybe price increase or through new introductions or new products or by finding new customers so that you'll be able to even sell more or even upsell your products to existing customers. Number 2 is your gross margin. The gross margin shows the amount of profit made from deducting before you actually deduct other operating costs. Gross margin equates to net sales minus the cost of goods or services sold. In other words, this measure indicates the percentage of income that goes towards the cost of producing your goods or your services, excluding other operating expenses or interest and taxes. For example, I'm manufacturing juices and selling them. My cost will include materials such as fruits and etc. Fruits will be the cost of goods sold, and the labor of the person involved in manufacturing those juices will also be the costs. So bear in mind that some costs are variable and are fixed. Without getting too technical, this metric reflects the efficiency of the business processes and basically states the overall productivity in numbers. This number can actually be increased by improving the efficiency of your processes and your productivity, thus reducing maybe your costs, which will eventually improve your cash flow. Number 3 is your net profit margin. Net profit margin is crucial. However, many organizations, especially small businesses, they do not pay particular attention to this KPI. This metric determines how much profit was made by taking into account income generated from your sales and deducting all the expenses incurred for generating that income. The necessary costs include your operational costs, such as your rental, your salaries, and also include the cost of purchasing material, your cost of goods sold that we talk about, so as to get the net profit number. This KPI effectively evaluates the company's ability to be profitable. As such, investors and lenders love this KPI, as this can predict the sustainability and the potential growth of the company. To improve your net margin, you need to look at ways and means of increasing sales, as we highlighted on KPI number 2, as well as ways and means of managing your costs. Looking at necessary costs, that's an important exercise you need to do. You need to particularly pay attention to the costs and evaluate, are they necessary or are they not, so as to improve on cost-cutting measures of the company. KPI number 4 is leads and lead conversion rates. Everyone knows increasing income requires more sales, which means finding new clients, finding new business, and this requires access to new business leads, as well as the ability to turn those leads into customers or clients. So won't it be great to measure this crucial element? By measuring leads and conversions, you are effectively establishing how many new leads did you get and from where, and how many of those leads became new customers for that particular period. Lead conversions rates can be calculated by dividing the number of the new leads per month by the number of the new customers paid that month. Some business owners or business development people and managers don't like this metric because it kind of exposes you if you didn't do anything about lead generation. Getting into the habit of measuring this is very important as a business. This metric can be increased by, for example, extending on your marketing efforts or your advertising efforts so that you generate more leads and more investments in the processes that help increase the conversion of those leads. Invest in professional salespeople and processes and excellent customer service as well. Number 5, very, very important, is cash flow. Cash is king, and it will always be king. Cash flow is a key metric, particularly for smaller businesses where cash flow management is a challenge. Measure this all the time. This you measure through maybe carefully managing your debtors and your accounts payable, as well as tracking and forecasting your operating cash flow based on the sales revenue and the gross margin metrics that I spoke about earlier on. This metric will indicate areas of the business that is generating and using the most cash. Check out one of our videos that are called 10 tips to maintain a strong business cash flow. You understand more on that. Investors and credit lenders really like the cash flow metric as it measures your ability to pay their debts. This metric allowed potential cash flow problems to be identified and managed in time. Tracing and forecasting your cash flow allows the business to manage the crucial aspect better while using credit lines responsibly. And this can help during tough times. Number 6 is customer acquisition cost and lifetime value. Acquiring new clients is quite challenging. It's a challenging process, and it actually involves various costs such as advertising, marketing, as well as the time and administration costs of onboarding a new customer. However, this cost must be evaluated in terms of the lifetime value of a customer. Customer acquisition costs are calculated by dividing the cost of acquiring and onboarding during a specific period by the number of clients acquired during that same period. This metric is even more insightful when compared to the lifetime value of the average customer, which reviews how much revenue the business can expect to earn from a typical customer. It can be calculated by multiplying the value of an average sale by the retention time for a typical customer and the number of transactions a typical customer usually generates in that time frame. This metric highlights what is affordable in terms of acquisition costs per customer and can help distinguish high profitable customers from those who are too expensive or too difficult to convert. One of the ways in which to improve this metric is to focus on customer satisfaction and the retention rates as well. This brings me to my number 7 KPI, which is customer satisfaction and retention. This matrix revealed how satisfied your customers are, and thus how likely are you going to retain their business. Satisfied customers are easy to retain over the long term and make them repeat purchasing your products or your services. And they generate both leads and conversions. Your customers should be your salespeople as well in your business. They need to be really satisfied to the extent that they are going to tell other customers to come and buy from you. The metric can be measured through customer satisfaction survey or even by simply making regular calls to your top customers to find out what they are doing. This KPI can be vastly improved with focus on quality services or products, and also excellent customer service and relationships. And this is largely achieved through satisfied and loyal employees. If you don't have such, you will see that you might lose clients instead of gaining them. My number 8 is employee satisfaction. Your employees are your greatest assets. So employee satisfaction is a key metric to measure, as this matrix measures how satisfied are your employees in your company. It can be measured through feedback, open feedback in the organization, especially when you are doing your maybe performance alignment sessions. This can also be done via random surveys. By regularly measuring employee satisfaction, you can address any issues timelessly or any concern. This metric can be greatly improved by treating employees fairly and creating a positive company culture or a company environment that they will feel proud of to belong. Employees determine the overall success of the business because satisfied employees are more productive and will enhance your progress towards achieving the goals of the business. So your top management should encourage an environment of openness so that you open up communication and identify problems in time and communicate them immediately to enable positive response and actions. My last KPI and favorite is number 9, progress towards goals, company goals and deadlines. People who know me or who have done business with me knows that this is very critical KPIs. These metrics provide insights into the company's capacity for production and its performance in relation to set goals. This flags potential issues. Performance measures and performance accountability are key. I cannot stress this enough. If you don't have a goal or accountability tool within your company, then you are aiming at no target. Every business should have goals and deadlines which are achieved in milestones. This means you can track progress through the number of milestones that are met on target and or that are overdue. The company's overall efficiency in meeting milestones and deadlines can be improved by developing effective solutions to identified issues such as unrealistic expectations, insufficient resources, and low productivity. Because sometimes if you're not meeting your goals, you need to go back and analyze why. Someone might say, Molen, where do I get the time to do all this? Tracking all these business metrics may seem challenging and time-consuming, but for improving performance and business growth, it is crucial to do so. Just a tip that we adopted for our company. On the 7th of every month, we look at achievement in the target for the previous month. 15 minutes with each and every one of our staff members to reflect. This has improved our productivity as a company. From our management accounts reporting, we also have incorporated some of the KPIs I discussed as we share them with the executive members of our clients, so for their key decision making. Don't worry, as your accountants, we will be able to assist you in tracking many of the KPIs I discussed in this video and provide advice in respect of tracking non-financial KPIs, allowing you to monitor and assess the performance of most crucial business processes and to make informed business decisions. Thank you very much for watching this. Don't forget to hit the subscribe button and like and share or comment. Give us some comments. What else do you want to hear from Brandmo Business Hub channel? Thank you.